Hi, everyone, and welcome back to VCTV. So today is the weekend session of VCTV. So it's a Friday. Oh, I forgot. Happy Friday! How's everybody doing? End of the week. How are the spirits? I just want to see some energy from all of you.
Good.
That
Very
is
good.
a relief.
Awesome. Welcome. So today again, when it comes to end of the week, I'm also equally very much excited when I start when I start my week as well on a Monday. Today we have a lot of diverse panel in that sense as well. We have people from dialing in from India, we have people dialing in from Jordan, US, and Canada. That's what I like. I mean, I really want a diverse panel of investors, speakers on my sessions, on the Asia panels. Some of you have already spoken at US panels. You understand the concept of VCTV. So yeah, so just let me just a little bit give you a insight, background on VCTV. So this is a platform where we connect investors to startups because we are an exchange. We are a community built by startups. The startups look forward to us for helping them to raise funds. So that's where the investors come into play. Investor like yourselves are obviously actively investing, and that's what we do. We connect you with the kind of startups that you're looking to invest into. So COVID-19 has changed everything. As we know, the pandemic that struck the world in March 2020 has changed the entire landscape. So we used to have roadshows, offline roadshows all over the world under the brand of Blockchain Economic Forum, which obviously couldn't be done because of the coronavirus shutdown. Hence, we moved into this online format since February. And ever since then, we have been running the shows Monday till Friday. We try not to even miss out on one single panel. So that's the beauty about these sessions, you know. So as much I love hosting them and moderating and speaking to, I'm sure you guys also love to be on our panels because I see a lot of regular faces coming back on the show. So just giving you a perspective on a Friday. I mean, it's going to be like free flow of sharing of information, and let's just sit back and relax and have a chit chat. So today's topic, I want each of you to leave an impact on the audience, leave an impact on the startups, because today we're going to talk about impact investment. This is a very big topic, especially during the coronavirus time. It has accelerated. I mean, you see everywhere, everyone is talking about sustainable investments, impact investments, green investments. So it's all over a digital world. So it's a big topic, and I'm looking forward to hear some great insights from each of your region. Like, you know, you represent different regions. Some of them are global. Sorry, I have to admit that. Some of you are global, but some of you are regional. So I'd like to know about the insights as well. So as I said, it's about impact investments. And COVID-19 has amplified. We hear that like from all those, you name it, UBS and BlackRock. I mean, they say it's amplified. So before I start questions, I just want to introduce myself. So my name is Sunny Mohanty. I'm the regional director of LATOKEN, and I'm based here in Singapore. That's about me. So quickly moving on to each of the speakers. Today we have two speakers who joined VCTV Asia for the first time. Hence, I would like to open the floor to them first. So in Asia, I'd like to go first with India and ask Sumendra Ghosh to introduce himself. Hi, Sumendra, welcome. Happy Friday.
Hi, Sonic, can you hear me?
Yes,
Hi.
we can. Very loud.
All of you, and thank you. Thanks for having me here. Hi, everyone. This is Shom from Mumbai. As a quick background, I co-founded a group called Vivriti Group back in 2017. What we aim to do is to use very mainstream capital markets to solve for poor state of financial services in our country. That said, India's capital markets aren't much to write home about. So state of capital markets itself is quite shallow, but that's what we use to solve for issues of last mile finance to low income households and small businesses. That's what I and my co-founders have been doing for the better part of the last decade. So I think excited to be here. I want to share my views on the impact of the pandemic on a country like India. And I think one of the biggest, we'll speak more about this, but I think one of the biggest impacts is a broken state of financial services and financial markets, which impacts small businesses. But yeah, more of that later. My own background is a combination of investments, investment banking, and structured finance. Very happy to be here.
Excellent. Thank you. Thank you so much for that introduction. Next, I would like to start with Anis Rumawe, who has joined the Asia VCTV panel for the first time. Hi, Anis. How are you? You're on mute. You're on mute.
Thank you, Sunny. I'm very well. Thank you very much.
Okay, please do a short intro about yourself and the company you represent so that we can go from there.
Sure. Catalyst Investment Management is a renewable energy efficiency investment management company. We develop projects. We've also, in 2006, had a clean tech, energy and water technology investment fund. But currently, our primary focus is developing and investing in renewable energy projects across the Middle East and North Africa regions, possibly a step beyond that as well. And they're primarily solar projects. We manage, our latest fund is a equity fund, primarily with shareholders that are EU governments, the likes of FMO from Netherlands, DEG from Germany, the EIB, etc. Original background, I was a technology entrepreneur in the US in the IT sector, but now I've shifted to renewables.
Oh, okay. So are you based in Jordan or are you based in the US?
Based in Jordan. I moved to Jordan about 18 years ago.
Oh, long time back. Okay. Welcome, Anis. Welcome to our panel, on our weekend panel. Thank you. So next, I have two speakers that were on my panel yesterday, but still for those who of you haven't met them or haven't hear them speak, here go. I'm going to start with Louis. Hi, Louis. Welcome back. Welcome back to VCTV. Happy weekend. How are you?
How you doing? Yeah, I'm not last for once. Wow, great. The U.S. comes in not last, but I come on to VCTV and someone asked me this yesterday, how many panels do I do? I say I do as many as I can because it's informative. And if I have the ability, a platform to share my knowledge with others and the investment community and entrepreneurs, and that's a benefit. And I come here for you and Minnie Mouse. Just keep that in mind. But just a little bit about me. I've been in the financial industry for over a quarter century, been involved in technology for over 30 years. I'm a managing partner with FJ Partners and also the CEO of Megahoot, which we are involved in artificial intelligence, AR, VR, blockchain, not the crypto part of it, but blockchain itself, and other, robotics, other parts of technology. And the topics that VCTV brings to the table are really important. And I think that anyone that's viewing this, and I'm sure the viewership's going to continue to go up, you have to learn from this and try to incorporate this information that you get from the great panel into what you do business-wise. So that is my introduction for this Friday. Happy Friday.
Happy Friday, but I have to add something, Louis. For those who do not know, Louis is also a radio and a TV host, correct?
Yeah, I'm known to do a lot of things, yeah.
So yeah, he's just kept quiet from all of us, but he's also, he's all over social media, by the way. Thank you, Louis, for that. Okay, so last but not least, obviously, I was crossing US, then I cross US and go to Canada, land in Canada. So Max, welcome back to VCTV. So we had some great insights from you yesterday about waste management in India. So today, you're going to talk about impact investment. So please help introduce yourself to our new speakers and the audience.
Thanks, Sonny. It's a pleasure as always to be here. And my background is I've predominantly been in the finance industry and consulting. Been in investment banking, trading for hedge funds. Then I basically moved on to and transitioned into what I'm doing now with Manojava, and that is mentoring startups, investing in certain startups with heavy potential who are aligned with our vision. And so impact is social impact and impact investment, ESG investment is something that's really paramount and is now, also more need of the hour. So we are very much, aligned with that philosophy and that need of the hour. So that's where, that's how I basically I'm involved with impact investment. So that's,
Excellent.
yeah, thanks.
Thank you so much, and welcome back to BCT
Thank you.
again. Great. So we have the first round of introduction of our speakers, of our investors. So next we would move to our question and answer sessions. Obviously, let's keep it more interactive, engaging, and feel free to ask each other questions while we go. Let's keep it going, interesting, fun, a lot of content. Let's end this week on a high note. So I'd like to start with Sumendra. Hi, Sumendra. Just share your insights. How has COVID-19, the pandemic, accelerated impact investing or amplified the investments in impact startups?
I'm going to, before I get to how it has accelerated, don't mind me talking of how it has left a hole as well. And there lies the opportunity, by the way. There lies the opportunity, really. I'm going to keep my comment a little specific to India, frankly, because that's what I understand a little more than I do the others.
Sure.
Among the many casualties, one thing is clear is that it has left financial markets very stirred, pushed participants of capital markets back into their shell. Most of them are fence sitting, waiting for the storm to pass. And this includes very mainstream investors alongside otherwise investors in startups and small businesses, right? So it includes everyone from venture capital funds, venture debt funds, all the way to mutual funds and insurance companies. And we see that in a massive flight to safety, people postponing decisions to invest. And that's the problem is that it kind of chokes the flow of money to small businesses, to mid-sized businesses, and very importantly, it chokes money to the non-bank sector in a country like India, and I'm sure this is the case in many other countries, where the last mile financing of low-income households and small enterprises is heavily dependent on the non-bank sector. So to our mind, I mean, as a group, this is something that we've been focusing on for the past decade, like I was saying. These dislocations have been coming by in India over and over again. COVID-19 is possibly the fifth one in this decade. The fourth one being a massive corporate defaults, which took us down. But I think that's where we diagnose the entire economic chain will reverse, which is that when households and enterprises start getting capital is when we will see the revival of demand for industrial and consumer goods, which is where the recovery will really start. So I think what has helped is that since then there has been bouts of stimuli by government, by the central bank, by the securities regulator being more benign on things they do, by making regulation which has been more forthcoming and laying the carpet out for investors to come and invest in these segments. But again, where we are right now, all of this put together, the opportunity is massive because there are pockets of capital which are looking at this and saying that, you know what, these are sectors that desperately need the capital. They are proven business models over a period of time. Credible management's just caught in a storm. So you can do good, you can make the returns you want, and help deepen markets as we go along, right? So I think therein lies the opportunity, and we are seeing the advent of a wide set of, I'll qualify that. We are seeing the advent of a wide set of offshore investors coming into country to say that these are excellent times to start picking up assets, while domestic markets still sit on the fence. Yeah, that's where things are, I would say.
Okay, great. I mean, you touched upon some points that I want you to elaborate on. Like you said
Yes,
that
please.
obviously left a hole, like the coronavirus pandemic has left a hole. Is it just specific to impact related startups or investments, or is it generally across the board?
No, it's across the board. I mean, the flow of money just choked out, right?
Yeah.
And when that happens, the ones to suffer are the low rated issuers, the smaller businesses, the last mile financiers. Those are the guys to suffer more, right? Because the stimulus more often than not finds its way to the larger state-owned enterprises, to the larger group-backed enterprises, and so on, right? So the impact is uniform across on businesses. The flow of capital is not uniform. And as a result, there exists an opportunity.
Absolutely. That brings to my next question, the challenging times. I think Asia as a whole is going through a lot of challenges when it comes to social impact investments, because you touched upon, economic poverty, and, so that aspect, I just wanted to, okay, maybe I can come back to you later on social impact investments and what's the status in terms with regards to India later. So yeah, so next, thank you, Samendra. Next, I'd like to ask Enis. Hi, Enis. So we'd like to know how COVID-19 has accelerated impact investment, and I would just probably touch upon which regions, what geographies you invest, what startups do you invest, and what do you see in Jordan or Middle East as a whole in terms of social impact investments in generally, or impact investments and other areas. Thank you.
Thank you, Soni. So we're primarily investing in Jordan, in Lebanon, in Egypt, Morocco, Tunisia, what we call the Middle East and North Africa. And in our sphere of renewable energy, I think there's been two drivers. One has been negative, which is that there's less demand for electricity with the shutdowns, with the business environment being weaker. There's less electricity consumption. So our market shrinks in general. The good news is that with interest rates going down, and our projects being capital intensive, a solar project is capital intensive. The OPEX, operating expenditure is 1.5% of the initial investment per se. And the lending costs are usually 75 to 80% of these projects are debt funded. The equity is 20 to 25%. So the cost of debt is a huge factor in the final tariff. And because interest rates have gone down, now we can afford to have much lower tariffs for the end client. So it results in more efficiency in our sector, actually. Prices go down. And I'd say the only other factor to consider is that there's a bigger focus on self-reliance, more independence, less dependence on logistics, oil, gas flows for your power generation. And that's positive for renewable energy and renewable energy plus storage, which is the new kind of next wave, we call it, of renewable energy.
Right. When you say storage, do you mean the data centers or?
Electricity storage of electricity. Okay. Electricity storage, yes.
Right. Sure, got it. So obviously you cover Middle East and North Africa. Okay, cool. Thank you for those insights, Enis.
Sure.
Start. We'll go deep dive into more areas after this. Next, I'd like to go for Lewis. Hi, Lewis. So same questions. Obviously, COVID-19 has amplified many things, has digitally, transformed the entire landscape. So just talking about impact investments, how do you see what's happening in that space?
Well, the pandemic left an indelible mark. I say this all the time on everyone, on society, on how we live and what we saw as normal, which is not normal anymore. You have a new normal coming up. Enis, touched on storage for energy, and that's always a big issue because it dissipates. It's a big thing. So if they can find a solution, that'd be fantastic. Impact investing. it's everything. It's everything. You know, people, you know, they use the acronym ESG. Okay, where you're the integration of environmental, social, and governance into your investing methodology. Okay, people mistake that with, oh, you're doing good things, so you can't make money. The bottom line is impact investing is a balance of performance, and the only way you can sustain it if you make it profitable. So you need to make it profitable. There's nothing wrong with capitalism when it comes to, you know, having an impact. Okay, and many people, many companies look at impact investing differently. You know, what we, and I'll just go over a few things, you know, just to make it simple for people. Impact investing, you can go and create, you know, especially in technology, you can create hubs where you're teaching people in inner cities, you know, whether it be in inner cities or it can be in Africa, it can be in India. You create hubs where you're mentoring and you're teaching and you're bringing these startup companies, these entrepreneurs, and giving them the opportunity to learn. Okay, in manufacturing, if they go and they create these educational environments where they can teach people skilled labor as opposed to menial labor, it'll enhance that environment too. Then you'll have more technology, robotics in that arena. Okay, impact investing is impacting the community, impacting what's going on. You have to make a change, social change, environmental change. Okay, governance in companies, getting the right people involved. Okay, I'm a big advocate of pushing women to the top, and the reason I say that is because they will run a company better than a man will sometimes, because there's no ego there. There's no ego there. Okay, so we, you know, what we do, we have a women leadership program that we're going to be implementing by the end of the year, and it's going to allow us to go mentor and take female young women and help to mentor them and give them the skill set so they can be something better, or not better, but they can be something greater in the technology industry. Because in technology, you know, that someone I know, Gary, mentioned this, that you have out of 500 the S&P 500 companies, you have maybe 5-6% that are run by women. Okay, that's a problem. There's a disparity, and diversity is very important, because as a world, look, the panel here, diverse. You need diversity within a company, within your C-suite, within your board of directors. So, and what it does, it allows you to see things from everyone's perspective, and it makes your company better. So all these things come into play. And as entrepreneurs are building companies and stuff, they're looking for that guidance. And it's our responsibility to bring that forward. And hopefully, you know, with VCTV, they're learning this stuff. And this is a great topic with impact investing, because the reality is, there's a misconception that you can't have you can't have you can't do good things and make money. Okay, because without the profits, without the revenue stream, without making the money, how are you going to sustain doing good? You can't. That's why you have a lot of funds that are doing, you have more inflow into ESG funds than to non-ESG funds today. Okay, more inflows, and it's continuing to grow. And whether it's Blackstone, Goldman Sachs, or, you know, well, whatever funds that are out there, they're getting more inflows because of the good things they're doing, but they're also making the investors money. So that's a two-prong thing there that's beneficial to the investors and beneficial to society as a whole.
I think Louis, he touched upon very good points. And before pre-COVID, I mean, people were thinking that that's a financial trade-off when you're investing in impact-related startups. And you rightly nailed it down. I mean, because of COVID-19, obviously, the attention has shifted to, as you rightly said, ESG funds. And people see that there is a profit and there is an impact as well, as you rightly said. Thank you so much.
You have to have that, because without that, you know, how do you sustain it? You do good for 6 months and then you fall out. You need to do good for the next 60, 100 years. The only way you can do that is by making money and building everything. And it's doing with the solar part of it, that's good, sustainable energy. And the storage thing, as I said earlier, they figure out a solution for that, then that's going to be something that'll grow by leaps and bounds as well.
Thank you, Louis. Thanks for sharing those insights. Next, I'd like to go Sumaksh.
Yeah. So, well, basically, let me just share a few insights on this. COVID definitely has had an impact on impact investment, a negative impact. However, in the timeline of impact investment as a whole, there's a lot of traction that is yet to be achieved. Even before COVID, there was a lot that was yet to be done, right? So, like at IE Business School, I had the honor of speaking with Mark Esposito, who was one of the founding members of the Happiness Index. So I think tying the Happiness Index to investment milestones and investment vision would make sense, because the Happiness Index as a whole. So previously, economies were guided by the GDP in what they were doing, which is definitely a very important measure. And as Som said, consumption is something that spurs the economy. So we need to empower in a country like India, where there's a lot of youth. We need to empower them to consume, and the way we can do that for the bottom of the pyramid is by giving them last mile connectivity and efficient finance, right? So now the Happiness Index has GDP as one of the factors in its whole calculation. So imagine how holistic that is. And at the rate at which the world is going, Bhutan is doing all the heavy weightlifting at the moment in terms of balancing the carbon footprint. With the Happiness Index and with companies guided to having to subscribe to the Happiness Index while still not compromising on their profits, but with more AUM or assets under management which are dedicated to impact, I think that is when a real difference can be made. And it does have to also it does have to come from the top, in the sense that the government and regulators are going to have to step up and be involved in trying to spur impact investment. Like, for example, Canada is doing a lot of progress, with almost 58% of assets under management of the total TSX index, and that's phenomenal. So Canada is paving the way to just set an example for the world to show how to go ahead. And well, I feel as Canada does it, the real potential is in countries like India, which can actually benefit, and in many other countries, especially where productivity could be aligned with government initiative to spur consumption and to empower people to be able to participate in this ecosystem where they are basically empowered by government measures, and they could generate more consumption and income. So that's definitely necessary, and impact investment is going to be one of the, I think, pivotal aspects to solve this problem. Yeah.
Right. Inclusion investment.
Oh,
excellent. Yes. Thank you very much. So we are set with the first warm-up question. So next question is going to be more around technology. So the financial system is being transformed digitally, fintech, blockchain, AI, advanced analytics, and obviously regulatory changes. So how will these change affect impact investment in terms of influencing how impact investment is done and opening up new opportunities? So basically how technology, all these technologies, Industry 4.0 technology, influences how impact investment is done, and how does it open up new opportunities? I'd like to go first with Sumendra.
Shom will do. That's. Well, thanks. No, it's a very significant impact. Let me put it this way. The use of technology in financial services in India has been, let's say, it's been good in some areas and been completely lacking in some others. Mm-hmm. So areas like, say, insurtech, remittances, payments, right? These have progressed and have seen investments come in as well. So half of India's, I think, an obscene percentage of India's inflows through the last 6 months has been to one company. It's called Reliance. It's one of the largest groups. And it's happening because they're able to take technology to the last mile in some ways, right? And connect the last mile. And to that point, Louis, I have a somewhat of a counterpoint to what you said. I'll come to it in a minute. See, so those are areas where technology has crept in, where technology is very far away from being in terms of mainstream financial services, is in lending, in actual lending, where most of what happens is the old brick and mortar way. Banking in India is a dinosaur. It's trying to transform, it'll take its time. Fintechs have come to take over, and I think that that's a way forward where you have the ability to characterize a borrower, be that an individual or an enterprise, through data. The infrastructure surrounding something like that is getting better by the day. So you have credit bureaus, you have identification methodology, you have payments, remittance, collection methodology, which is helping all of this. But I think it's still some way off in terms of actually seeing our country move to technology when it comes to lending as a concept, right? When you talk of impact investments, if I split that, there is the last mile, where the question is, are you using technology to reach 1 billion people? Answer is an astounding no, right? We're very far from that, right? We're still very far from that. And that's where a lot of work is going on. People use technology for different parts of it. Some use technology to source leads, some use technology to assess whether someone is creditworthy or not, some use it to collect and so on, but it's not unified.
Right.
And the second part is that, is enough money finding its way to models like these? Is enough equity capital chasing models like these? There, I think the answer is slowly turning yes. So we've got the whole Reliance story. We've got a lot of edtech story. A company by the name Byju's, you might have heard, which is into education technology, which is reforming the way kids learn, right? And especially relevant in times like these when you can't send them to school and so on, right? So I think it's early days still for how tech is playing a role, not just in technology as a sector, how tech is playing a role as a horizontal across different sectors, inviting investments. Louis, the little point to what you said is that, look, we're over a period of time, we've seen a lot of investment into India being qualified as socially beneficial, impact, ESG, and so on.
Yeah.
There's that concept of greenwashing, which is becoming increasingly relevant, to say that we find a way to force fit it into impact. The issue that we progressively see is that now everyone who has invested in Reliance, right, has played a role in digitizing India, if that's the headline. But are there tougher problems that need capital? Tougher problems which have an ROE, which have a clear ROE, but need that extra amount of work that deserve capital? The answer, again, is an astounding yes, right?
Yeah.
To our mind, the solution is that those opportunities have to be brought to the fore. Investors' perception about risk in those opportunities have to be minimized, and which is what, guys like us, there are many others who are working towards, is to make it a more level playing field where investors get to see a wider set of opportunities, many of which are tackling tougher problems as well, right? Just going to take a pause there. Sorry, I want to hog all the screen space. Back over to you, Son.
No, yeah, so many very good points. Actually, I wanted to have a question to the panel, like social impact in terms of, are there enough investment going into solving poverty, inequality? So these are some of the social impact that somebody can bring to the investment. So what do you think? I mean, you mentioned Reliance digitally, obviously changing the whole landscape in India, but what about the investments in these kind of spaces?
Sorry, that question to me? Oh.
Yeah. Just in continuation with...
See, it's what I meant to say is that it's not that what Reliance is doing is not necessary. That's not my point. But if you see the total amount of money India needs to bring, say, 70% of its people out of the below poverty line, the number is smaller now, I'm just exaggerating, a large number of people out of poverty, money into one company is not going to solve that problem. We need many, 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 many companies doing good work, right? That work could be in financial services, that work could be in education, in healthcare. But the issue is that the capital coming in does not see all of these opportunities with a near equal lens, right? Which is needs work, to my mind.
Right. Thank you. Thank you for that.
If I can just, because he mentioned me, I just want to tag on to that. I think that, again, with impact investing, you have to do good things. And I think the government has to get involved with this. And if they subsidize the investments, if they're able to go hand in hand with the companies that are going and investing in these funds or these companies, they're able to do that. That's going to be the greatest impact, because now you have universal, some convergence there between business and government, where you have that public, government partnership, okay, where you can have the most impact. So that, and then that forces these companies to go and utilize their funds, as well as, the subsidies, to go and help these companies to do what they need to do, because yes, they need more capital to do it. Is there going to be a return on investment? There's no question, but you have to get over the hurdles. Okay. And if you mitigate the risk and the government helps with that, these companies will do more. And, you made a good point. And I just want to tag on to that, because you weren't opposing, you were adding on to what I was saying. So I just wanted to throw that on there.
Great addition to that. It's the governments and so like the public and the private investors coming together. And government has a big part. Thank you so much for adding that, Luis. Next is Anes. Same question: financial transformation and impact investment, and how technology influences impact investments.
Great point. I'm on the board of a micro fund in Jordan called Tamwilcom. And certainly in the micro fund area, where you're dealing with very, very small transactions, our average loan size is close to $70 per loan. And the transaction cost in the manual standard method is very high, and makes it, in addition to ability to access physically, and the logistics to kind of pay back and service the loan, we're talking about, a transaction cost. So mobile transactions, payment gateways, certainly what's required is internet access for everyone, 3G, 4G, etc. We're fortunate in that in Jordan, although it's a relatively poor country, it's considered mid to low income country. We don't have oil, we don't have gas in Jordan, although it's in the Middle East. But we have a high level of telecom and electricity penetration. Everyone has access to all of the above. So certainly in that area, technology is transforming. On the renewable energy area, we talked about storage, and Luis, also mentioned storage and breakthroughs there. Now, what we're seeing already with volumes of electric vehicles going up very quickly. The same type of batteries that are in electric vehicles, lithium ion, are in your laptops as well, are the standard for utility scale electricity storage. And the costs are going down quickly. As a result, 24-hour renewable energy, so during the day using solar power, charging batteries, and having electricity available overnight is becoming feasible compared to using fuel. In our studies in large scale, you can reach 9 cents, 8 cents, 10 cents. You're in the range of market price of energy. Of course, there are trade-offs. You're not going to have 24/7 electricity on a cloudy day. In our region, parts of India and other parts of Asia, cloudy days don't happen often. In certainly in Jordan, we have only 30 cloudy days a year. So what that means is 300 days a year, we can have 24/7 electricity based on solar energy. You still need backup. But the advances in technologies and the lower cost of storage allows that to happen. Third area of technology is technology to manage kind of supply and demand of electricity, and connect the supply with the demand more efficiently.
Yeah, I think that's AI, artificial intelligence, right?
Sure.
Thank you, Anis, for those great insider into Jordan and the cloudy days. I didn't know about it. Thank you. So yeah, Samaksh, over to you. Technology, impact investments, financial transformation. What are you going to say?
I think something that comes immediately to the top of my head is sensors to be, installed and leverage IoT to, to reduce waste and to reduce emission, especially to streamline things. Uh, Something which the whole world should participate and kind of balance the ship along with Bhutan. And on a second note, I mean, I definitely in the financial, in the microfinance landscape. Uh, well, just let me give you an example. Mohammed Yunus, the father of microfinance, had a very noble vision, and I think in the early days, Bikram Narula, he started this in India, and he was jailed. So let's think about why did this happen. Let's introspect, right? Because again, uh, before the government could, or before the regulators could get involved, and they should have gotten involved, especially in a country like India, which presents a lot of empirical evidence that this needs some involvement, and a lot of productivity could be achieved out of making this whole bottom of the pyramid efficient. But before that could happen, uh, we Vikram Narula landed in jail because the risk premium, was unjustified, right? He took this segment as a cash cow, which is not very regulated either, and took it back to the age of the zamindars or the landlords who would typically charge 100% interest. Like his interest, I think, was northwards of 24 to 28%. When the default in this segment, I mean, I still feel that the risk premium is way too high. Now, again, one of the factors when I was personally involved with a microfinance company in India, one of the factors tying down to the highest risk for justifying the risk premium was government political instability in certain remote areas where there's one politician who could completely swing the opinion of people, and even get them to default on their loans. I mean, there are different political motivations for this, but I feel definitely so. Again, coming back to the same point, why do they have such a big risk premium? Because one of the factors is also political instability. How can that be mitigated? Is by regulators and politicians, trying to get together and stop doing it. And that is how we could definitely give. Also now in India, I think Soom would agree that the government is trying to get in small finance banks to kind of play in this field along with microfinance and micro lending institutions. So I definitely think it is as Lewis in his Soom. I mean, I feel that the government definitely needs to play a big part, and because this is going to be a long-term thing. ESG impact investment has started. I'm happy about it that it has started. It should have started way earlier, but the pace has to definitely step up. So that's yeah.
Okay, thank you so much. I think you just spoke in lines of what Somendra said in terms of lending in India. So thanks for that. So next question I'd like to start with Somendra. What are the drivers in impact investment? What do you see are the key drivers?
So I think if I speak from an investor standpoint, and we've been investors in both enterprises that are in sectors like healthcare, logistics, packaging, which are very core to the economy. We've been investors in financial services, which largely deal with last mile finance. I think a few drivers that I can think of, and we had that topic roll out now, is regulation plays a big role to my mind. And I'm not saying that it has to be extremely investor friendly or so, but just stability of regulation, just stability, just that it's predictable, that's not going to change overnight, that things won't just turn over its head over the next 3 or 4 years, and you can invest with confidence. That's one. The second thing to my mind, which is a very, very key driver, not just for impact investment, but investments in general, but specifically specific to impact is the reduction in amount of information asymmetry that floats around, which really creates the divide between perceived and real risk, right? And that spoils everything, because that makes your return less lucrative, that distorts markets and whatnot, right? And at the core of this problem is just simply lack of data democratization. To put it in, take two very simple examples. One simple example is two businesses and an investor looking at both of them, finding it the devil's job to figure how to compare them and how to say one is better than the other or not better than the other. You just don't have data. You just don't have anything to go by, right? And this is a chronic problem. This is not of today. This has been there around. It's getting better. It's definitely getting better with the advent of technology. Now you have many more data sources and data points to triangulate an investment decision, but we're still far away from there, right? So that's what I would say is the second large thing, which is information asymmetry. And the third, to my mind, is the lack of secondary markets, and which brings me back to the point I started with, which is shallow capital markets. I think that when you're clear that you won't find an exit for your investment, more so with either in public markets or in secondary private markets, right? Yeah. The call you're taking sounds just more daunting, and you want a higher risk, a higher illiquidity premium, etc., and that kind of tailspins into inefficiency one way or the other.
Yeah.
So those, I think, are top of the mind things that hinder flow of money into these sectors that we're talking about.
Right. Great points. I think, Soumendra, thank you so much for sharing that with our audience and our speakers. So next, Anis, I would like to ask you the same question. What are the drivers in impact investing as per you?
I've always found, Sunny, that at the end of the day, there's so many things one can do. I mean, kind of the circle of all the areas one could focus on is huge. Yeah. So why not focus on areas where that overlaps with good things that are helpful, where you can have an impact? So then you have two birds with one stone, or you're focusing your passion, even if it's different from having an impact to having an impact, but still not deviating from a passion. For me, my return to the region, I grew up in the US, I was educated in the US, worked in the US, was for impact. That was the essence of what drives me and drove me. And that's why I started more in venture capital technology for energy and water, because I felt knowledge is power. And the ultimate impact is being able to develop and scale technologies. And then you create knowledge labor, you have opportunities for women because you're not out in the field, you're in an office, and you create a higher level of income. So today we're more on the project side. That was taking a more practical approach, meaning it was a bit too early to focus on energy and water technology in Middle East and North Africa. Just the ecosystem wasn't there. In IT, it is. We're fortunate. We have a lot of tech players, and I was in the IT industry in the US before I moved back. But in energy and water technology, that's a future phase for me. Today, it's impact through renewable energy and energy efficiency, climate action.
Great. So that brings me to the next question for you. What role should governments play in embedding climate change data into financial decision making?
It's a very deep question. Financial data and climate decision making, or is it climate data and financial decision making?
Climate change data into financial decision making.
Yeah, no, it takes foresight for governments to do that, right? At the end of the day, unfortunately, you can manage by what you can measure, right? And if you're only measuring dollars and cents and not looking at medium and longer term impact, and have trouble measuring it, then you're going to make decisions that are going to hurt you medium and longer term. Jordan prides itself on its tourism sector, which today, of course, is not doing well, but we have the baptism site on the Jordan River. We have Mount Nebo, where Moses lost his stick. We have Petra, 4,000-year-old Nabitian city. We have the lowest point on earth, the Dead Sea. And so for us, environment is a core part of our tourism industry and therefore our economy. So embedding climate data into financial decisions through that, let's say providing, for example, central bank, lower cost central bank loans.
Right.
For climate or environmental impact related businesses or projects. I mean, and these are things that governments can do. Then that's on one side the carrot. The other side is stricter enforcement of environmental standards, so that there are higher certification costs, there are penalties, and other factors. I mean, these are the traditional kind of trade-offs. Jordan is relatively good, but unfortunately it makes exceptions. When there's a big financial impact, for example, we have a huge, large petroleum refinery in Jordan.
Right.
Horrible. And we make exception to our environmental regulations as it relates to that refinery. And that's for, being practical economic reasons, but something we oppose, of course. Jordan was the first in MENA to adopt renewable energy regulation with a solar PV program, utility scale. So we signed our first PPAs, power purchase agreements, for solar projects in 2014. Morocco was the first in wind in the region. So you do find what we call, because Jordan's a poor country, as I mentioned before, or mid to low income, you find the poor countries in the region having a higher level of education, number one, because you depend on that to make your bread, to feed yourself, and you end up having governments that are more adaptive to the market. So immediately renewable energy once it became cost effective, was adopted very quickly.
Right.
We couldn't afford to be a leader in it, globally, but we could afford to, when it became cost competitive, to be a leader regionally.
Right.
And I think that's the minimum that we can do. Look for economic, practical ways to preserve the environment.
Excellent, Anis. Thank you for sharing your perspectives and insights, on a broader scale of because we have had panel speakers who just spoken about Dubai centric sort of investments, but now I came to know about Jordan, Morocco. Excellent. Thank you so much for that. I'd like to ask, what are the drivers, the same question, drivers in impact investment?
So definitely some of the drivers are income. The people who participate in the ecosystem of the company, like employees, obviously we need to take care of their basic needs. So income, the social support that they are able to get from their community, every element, the community meaning institutions, the government, the kind of access they have to education from a long-term perspective, the kind of access they have to healthcare. Definitely all of these holistically need to be considered, and if a company, so again, these are basically also the founding tenets of the happiness index. And so if a company is able to align itself with the tenets of the happiness index and what would drive sustainability, they could then pretty much go in the route of impact investment and ESG, and find themselves as a forerunner and an example for other companies to follow. Because I would definitely, though it at the moment there is always a dilemma between profitability, maximizing shareholder value purely in terms of profits, and kind of causing a social impact. And this dilemma and this gap could be reduced by giving tax subsidies, tax grants. There are various measures that could be implemented. So, these are the few drivers. It definitely access to education, healthcare, income, social support structure in the community, and I think that should pretty much spell success for firms and the government participating in creating impact.
Thank you so much. Thank you so much. Last, I'll ask Luis. I'm just conscious of the time. I just realized, Luis, your insights about that.
Well, I just want to talk about things in general. Empowerment of the people. This is important. That impact investing should do this. And it has, I think more companies need to be aware of this. The government overregulation is a problem because all governments work in a funny way. They say, "Hey, here's the apple. You can look at it, but don't touch it." Then they say to you, touch it, but don't eat it. Then they say, oh, eat it, but don't swallow it. See, it becomes very complicated. And that deregulation of certain industries is important. But, it has to be a balance.
Yeah.
That has to be a balance, because if you're not careful, then you will go back 100 years where pollution and everything was crazy. Look, Ennis said the great things he has over there. Hey, we have hurricanes in the United States. We have tornadoes. We have wildfires. We have flooding. We have the whole gambit of things. We have locusts somewhere. Okay, so the environment is very important. And empowering the people, it starts from the top, but if you go, it's going to impact the bottom. Okay. And that's why you have micro investing platforms as well. You have like Robinhood, what is it? Stash, Acorns. I don't know if they have it over there, but they have it in the United States. It allows someone to go invest $10 in something. Okay, take a piece of something. I don't know if everyone's familiar with Zillow. That's the real estate platform here in the US. I know they're global. The founder of that, the former CEO, now created a micro investing platform for real estate. So it allows someone to get a piece of something. So it's interesting how things are going. And I don't want to take too much time here, but government regulation needs to be modified in order to attract the private sector to come in and work with the government hand in hand to do better for society. So if we do that, we're going to have a win. We don't do that, we're going to lose on many, many different levels. So that, this is stuff that they should be focused on.
Excellent. Empowering the nation. Thank you so much. I had many questions about impact for next generation. Like we have the Generation Z, the millennials, but I don't have the time, and the climate change investments as well. But obviously it's a Friday. I don't want to take much of your time. I just like to know some closing remarks from each of you and feedback on VCTV. Sumendra, over to you.
I think it's a subject very dear to me personally, and a burning need of the hour. Like many say, we've got among the many other things COVID has presented. It's an unprecedented opportunity to direct money to where it matters the most. And I think we should keep the good word around, at least collectively, and see what's possible. So yeah, that's all I'll say.
Because you keep on coming back on VCTV, so what's your feedback about VCTV?
Let's do more of these. Let's do more of these. Let's exchange more ideas, elongate the sessions, and cover more topics. Yeah.
Excellent. I like that. Thank you so much, Sumendra. Anis, what's your closing remarks for the weekend, and what's your feedback on VCTV?
Closing remark: don't give up, and where there's hardship, there's opportunity. Easy to say, but the ambitious and resilient will make it happen. And VCTV has been a pleasure to meet everyone every time. Really great panelists, great hosts. So thank you for the opportunity. Thank you.
Welcome. And the same ways, lovely to meet you as well. Thank you. Sumaksh, what's your closing remarks?
Well, as usual, always a pleasure to be in the VCTV, moderated by you, and fellow panelists' enriched perspectives, always great to hear. And my closing remarks is that basically this game theory suggests that if the rule is not enforced, someone, or even though there's collaboration and cooperation, someone would default in order to further profit. So my closing remark is the government should kind of use ways to enforce, use good ways. I mean, not restrictionary ways, but ways to enforce and allow companies to participate in the vision of ESG and impact.
Excellent. Thank you so much for that closing remarks, Sumaksh. And I know you like VCTV. Keep on coming back. And lovely to hear from you all the time. Last but not least, Luis, I mean, I have to ask because there might be new people watching you today. So what's your take on VCTV and your closing remarks, please?
Oh, I mean, VCTV, I say it all the time. It's a platform that allows for the collaboration of people, ideas, sharing that, and the viewers to learn, listen, and take something from it. Because if you do that, you'll adjust something in your business model that'll be beneficial, period, to yourself or maybe to society. And I have to leave with this thought, entrepreneurs, be fearless in what you do. Investors, be aware, be conscious of what you invest in. And if you're looking at impact investing, just look at the good things, figure out how you're going to make money doing it so it's sustainable. Empower women and empower diversity, okay, and try to make a difference for the next generation. If you do this, again, it's a win for everyone. Excellent. And that's it. And you're doing a great job. And you got to get Minnie Mouse involved in this conversation because I'm waiting for her to talk.
Thank you, Luis. Thank you, Luis. I mean, you are the driving force behind empowering women. I mean, that's a role model over there, right there. Thank you so much. Minnie Mouse is right behind me listening to your comments as well. Thank you so much. So, I mean, I could have just extended this session for another 1 hour, but it's just a Friday evening for us in Asia. And obviously, it's a time to just chill and, relax after a heavy week. Even though it's coronavirus, you're locked down, but still we are working more hours, right? Agree? See? So this is a time to just take a break and just chill. Okay, I really appreciate your time today. I really appreciate your insights, very valuable insights, very valuable for the startup community who are watching us today, who are looking to raise funds, who are looking for help, because obviously this is a very unprecedented, difficult times that everybody's going through, or more the startups community who have gotten affected by this coronavirus. So I think your insights are very valuable for them. That's why your profiles are featured on our website, www.latoken.com/profiles, where the startups can go and meet you in person, like on a virtual session, and can share their ideas, their innovative ideas to you, to get mentorship, to get guidance, to get probably help with expansion of their business. So it's very key for us to keep this going. And thank you so much for all of you to make this happen. VCTV is, I always say VCTV is VCTV only because of you people. Thank you so much. And on that note, have a great weekend. Have a relaxed weekend because we're going to come back next week with more topics. We have all different sort of topics, as you all know. Have a great weekend, relaxed weekend, be happy, be safe, and I'm looking forward to connect back with you all again. Thank you so much. Take care. Bye.
Thank you. Wonderful catching you.